Hello, and welcome to this session. Today we talk about introduction to cryptocurrency trading, part two. In our last class, which is day three, we introduced ourselves to what cryptocurrency is all about, and not the class before the last. I introduced you to what cryptocurrency is generally. Then last class, I introduced you to cryptocurrency trading, and we spoke about types of cryptocurrency trading. We focused on um, is meant to be. Sorry, please. We um, focused on sports trading. I explained everything about sports trading for you. Different kind of orders you can place from sport trading, etc. Now today we'll be talking about futures trading. That's what we're talking about. Futures trading. Now, first things first. What is futures trading? I don't want to speak plenty English. That's why I just keep it simple. I may full this whole page explaining what future trading is, but it's of no use. What you just need to know is the significance. You understand what it actually means in a nutshell. No need for me trying to prove that I, 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 I can type very well. I don't have to do that. I don't have to start proving that. All those things doesn't matter. So what really matters is how you can trade. You understand? That's why I'm keeping all this definition short, and simple. Now, if you are the kind of person that love to go deep in whatever you are doing, then let me know. But if you are watching this later in the future, all you have to do is just, if you have access to me, fine, you can come to me. I'll give you some deeper explanations and all of that. But they don't really matter. You don't need them at all. This I'm just going straight to the things you need. But if you are the kind of person that love knowledge, you want to know deep, then you can message me. And if you are watching this video and you don't have access to me, then you can just browse it up and you get a lot of information. All right, so now future trading is the act of betting on the price movement of any financial instrument. As simple as that. In our last class, we spoke about spot trading where you have to buy it and keep it in your wallet, right? But in futures, you don't buy anything. You just bet. You understand? Just bet on price movement. For example, you can bet that the price will go up from a particular point. You understand? Maybe you say if the price of Bitcoin we start from 19,000 and move up to 19,100. You understand? You know, you have a start point of 19,000 to 19,100. That's your end point. If it moves exactly that way, you make money. But if on the other hand, it moves, so that is that. Now, let's move on. Now, with future trading, you can make money from both bearish and bullish. Yes, if you want to be a professional trader, you want to trade professionally. You know, there are some people that are not professional trader and they make money from trading. You understand? For example, you can learn tailoring and you don't have a tailoring shop. You just have it in case you just want to sew sharp clothes. You have other business you do, but you still know how to sew clothes. You understand? There are some people like that cryptocurrency is not their profession, but they still trade, right? So those kind of people, they can just trade sports. You understand? Just trade only sports, no problem. But if you want to be a professional trader, you have to trade futures. Why? The reason being that if the market is going down, if the market is on a downtrend, you cannot make money as a sports trader. A market can be on a downtrend, that's bearish. I think I've told you about some terminologies we use, all right? So if market is going short, is going bearish for a very long time, you'll be having problem. If market is going down for a long time, you'll be having problem because you'll not be able to trade at all. At all, you'll not be able to trade at all, right? Because what you do in sport is you buy it at a lower price and sell it at higher price. So if the price keep going lower and lower, it will be extremely hard for you to make money like that. You understand? Though it's still possible because if price is going down, you cannot just start from 50 and go down to 0 streets. It happens, but it rarely happens. It will go from 50 to 40, move up back to maybe 43, go to 30, move up back to 36, go to 20. That's how price goes down. It doesn't just go down straight. So you can still make money from the retracement, but it's not guaranteed. Nobody wants to be trading futures against trend. Nobody wants to do that. You will lose money at the end of the day. You understand? So that is the problem. You cannot trade only sports as a professional trader. You need to trade futures. Reason is that price going on an uptrend, you make money in future trading by longing it. If on the other hand, price is going down, you make money by shorting it. So with futures, you can make money whatever the market does. You don't care if the whole world is crashing. Understand? In as far you are getting your bias right, you keep making money. That's why you see me on my, if you follow me on my stories, on my WhatsApp, Instagram stories, you see that I always feel happy when price is dumping hard. The only thing I need to make money is volatility. Do you understand? Volatility means change in price. So once there is change in price, I make money. If it's going up, I have my strategies to spot an entry point. It's my order from there, and it moves up, I make money. If it's going down, I have my strategies that I use to get a spot. I predict that it's going down. It start going down, I make money. So as a professional trader, you have to know how to trade future, because futures is what you can do often with any market condition. Even if market is ranging, you can still trade with futures. You understand? The only time it will be difficult is if market is moving on a choppy. Don't worry, I don't want to start mentioning words that will get you confused, because these are the things we'll be talking about in the next phase. You understand? All this we have been doing is just in the introductory phase. So in the next phase, we'll be talking about charts and all that, right? But what I want you to get here is that no matter what price is doing, as a future trader, you make money. What you need to make money as a future trader is what is the volatility, the change in price. Volatility simply means change in price. If you want me to write a whole lot of notes about volatility, I can. But what it simply means is change in price. You understand? Now let's move on. Now some terminologies used in future markets and their meanings. Now terminology simply means terms used in future trading, and I will be talking about a few and most commonly used ones. Number one is long/short. Right? Long simply means you are betting that the price will move up. You know, I told you earlier that in futures, you don't buy anything. You don't keep any coin in your wallet. You are just predicting the change in price. You are predicting the direction of the price movement, yeah, right? Now, you make money if your prediction is right, and you lose, and you will see your trade running in profits. If you say from $10, price of this particular coin, particular asset, whatever thing you are trading, is going to go up. And as you predicted it, it began to go up. You will see that you see yourself running in profits. Now, short is the direct opposite of long. It simply means if you are betting that the price of the assets you are dealing with is going to go down, it simply means you are betting, it simply means you are betting that the price of the assets you are dealing with is going to go down from a certain start point. You cannot just say it's going to go down, you don't have a starting point. No, it doesn't work like that. You need to have a point where you enter from. That's okay, from so point to it's going to go down. Now, there is a lot of things that I will be letting you understand. Let me not mix it up. Let's just take it one after the other. Now, it simply means you are betting that the price of the assets you are dealing with is going to go down from a certain start point. If price goes against your prediction in both ways, whether you are longing or you are shorting, now, if the price goes against your prediction, then your trade will be running on a loss or a loss. You understand? Your trade will be running in loss. That is it. Now let me show you what these long and short buttons look like. We'll be going back to trade. We'll be going to Binance now, so that I'll show you what exactly I'm saying. No, I promise that I will not be too theoretical. Okay, let's log into that our account. I traded on it last week, I think. I was able to move it a little bit higher. Let's just log into that account. Okay. Yeah, we are in now. Okay, now for you to trade futures, there are a lot of ways you can do it. If you're using your phone, for example, let's just come down to that. You're already seeing it on a PC. So if you're using your phone, you will see those icons at the bottom of the page, of the home page. When you open Binance app, you will see home, you will see market, you will see trade, you will see futures. So you just tap on the futures. It's going to take you straight to the future page. All right, so this is the future page. As you can see it. Now, so it is the future market. You can also tap on future market. Then you pick any coin you want to trade on the future market. You see that on future, we are seeing perpetual, perpetual, perpetual. That's signaling that this is futures contract, not spot now. You're not buying it. It's just perpetual. It's not something that sorry, it's just what you are betting on the price increase or decrease. You are not holding it. Now let's tap on trade so that I can take us to the trade page. If you are observant, you see that this environment is somewhat similar to somehow similar to that of sports, right? But if you check this area, if you check this area where you are seeing buy and short and long, you understand, buy and sell, you see that for sport here they write open buy, buy or sell. That's what they write. If you go to sports, that's what you'll be seeing. But with futures, what you are seeing is what long and short. That's to tell you that long is equivalent to short. Sorry, long is equivalent to buy, short is equivalent to sell, right? Now, if you are longing, what you are doing is that it's not as if you are buying Bitcoin, but you are predicting that the price of Bitcoin is going to go up from this current price. If you look at this place, you see the current price. Right here is the current price. Right here is the current price. Right now, you see that this is the current price here, and it's 19,843, right? 19,843.5. That's the current price, right? It keeps changing because of Bitcoin high volatility, right? So that's what I want you to see here. It is open and short, not buy and sell. If you go to spot, you will see buy and sell. If you go to spot market, what you are going to see is buy and sell. Go to spot market, for example, you see that there is no perpetual here, right? All right, so let's go. Okay, now, so this is spot. What's all this? You see that with spot you have buy, you have sell, buy BTC, sell BTC, right? But for futures, that's not what you have. You have long, you have short. That's what I want you to see. You see, for futures you have open long, open short. Just to show you that on futures you are only betting on the price difference. You are not actually buying the coin. Now let's go back to our slide. So that's that. Then the next one we'll talk about is position size. Position size. That's what I'll talk about. Now, this is the total amount of the coin or asset you are trading. Let me break it down. I know this is very complicated definition, but I could not think of something direct, and I don't want to go and bring English from internet. I just want to use my own word. Now, let me explain to you. Let's say you have a coin like BTC USDT, right? BTC USDT on future trading. For example, we have BTC USDT. If you are longing that BTC USDT now, if you are longing BTC USDT, now this is what I want you to understand. You will need USDT to open this trade, just like we have it in sports. You must have USDT in your wallet because this is what you are using. Now you are now using this USDT to bet on the price of Bitcoin. You are using USDT to bet on the price of Bitcoin. Now, if you are longing BTC slash USDT perpetual, what you are simply saying is that price of Bitcoin is going to rise. You understand? That's what you are saying. You are saying that price of Bitcoin is going to rise if you are longing. But if you are shorting now, you are simply saying that price of Bitcoin is going to drop. And you are betting with your USDT. Are you getting it? You are betting with your USDT. So you have your USDT in your wallet. You understand? Now, for each time you are betting, you are predicting that to go down. Now, for each time you are betting, you have to select the amount of Bitcoin you are betting on. You understand? You can decide to bet on one Bitcoin. You can decide to bet on one Bitcoin on its own. One Bitcoin is currently around 19,000. So if you are betting on one Bitcoin on its own, so that means you are longing with one Bitcoin. You are longing one Bitcoin. For you to be able to long one Bitcoin, you'll be needing the amount of Bitcoin that's the price of Bitcoin. That's one Bitcoin is currently 19,000. So you'll be needing 19,000 USDT to open one Bitcoin. So now this one Bitcoin you open now is what we call position size. That's the amount of this Bitcoin you are longing or shorting. You understand? So that is the position size. Then you can do 0. You cannot afford one Bitcoin. You can trade 0.1 BTC. You understand? You can do 0.1 BTC. So that means you are betting on 0.1 BTC lot size, position size. So for you to open this trade now, you must have the amount of 0.1 Bitcoin in USDT. So if one Bitcoin is 19,000, 0.1 Bitcoin is going to be 1,900 US dollar. So you'll be needing 1,900 USDT to open 0.1 Bitcoin position size. So this 0.1 Bitcoin now is your position size. That's the amount of Bitcoin you are betting on, you are opening. You understand? Now, if price begins to go your way, you begin to see your profits. You understand? If you are buying a whole one Bitcoin now at 19,000, for example, and the price of Bitcoin go to 19,100, that means the one Bitcoin you are betting on is already increased by $100. So you're already on profit of $100. If you go to 19,200, you're You're already on profit of $200. I hope you are getting it. If you are if the price goes to 19,300, you're already on profit of $300. That's how it goes up. And if it begins to go against you, it just go from $19 to $18,900. You're already at loss of $100. You did not buy any Bitcoin, but you are betting on the price of Bitcoin. So as Bitcoin price changes, you are also making your money, or you are also, maybe if it's going against you, already also in loss, which is the same, which is almost the same thing if you are trading with exactly. If you are trading, if you are longing and price is going up, because long means you are predicting that price will go up, you understand, and you are longing one BTC. So this one BTC now is the position size you are entering. You understand? So if you are entering with a 0.1 Bitcoin, you can open with 10 Bitcoin. Depends if you have the money. But before you can open Bitcoin, you must have the price of one Bitcoin, which is currently 19,800. For example, let's just say keeps changing. So you must have that amount before you can open it. Either short or long, whichever way. You must have the amount of that one Bitcoin before you can trade. I hope that is clear. If your prediction is up, then if it goes up, your profit goes up. But if your prediction is up and is going down, then you'll be in loss. Then on the other way, if your prediction is down and is going up, you'll be in loss. But if your prediction is down and is going down, you'll be in profits. Okay, now so remove. So this is position size now. You understand? Position size. I think this is clear. Let's go back to our PDF slide. Sorry. So the next thing we'll talk about is margin, right? Now, margin is the amount in dollars needed to keep your position opened. After you have opened your one Bitcoin, for example, you must have 19,800. If the price of one Bitcoin, let me go back to that whiteboard. I think I can scroll this. So I can't scroll it. Okay, let me just clear it. Okay, now for margin. Now, this is what margin is. You know, if let's assume that one BTC is equals to 19,800 dollars. You understand? Now, for you to open position size of one BTC, you must have, sorry, for you to open position size of one BTC, you must have 19,800. You must have 19,800 in your wallet. So this 19,800 in your wallet is your margin. That is the amount in dollars that you need to open this trade and keep it running. So in as far your loss is below 19,000, is doesn't go to zero. If in as far your loss doesn't go to minus 19,800, making your margin now to become zero. Because if the price moves up, maybe you entered at 19,800, the price moves to 19,900, your margin now will go up from 19,800 to 19,900. That means you are in profit, right? The margin will keep increasing in profit if you're on the right side. But now, if you are now on the other side, you say it will go up, it's now going against you. This margin will begin to reduce. You understand? It will go to 9,700, 9,600. Now, if you now keep going and Bitcoin eventually go below 19,800, which is, I don't know if that's going to be possible. You understand? If it begins to go below the amount of margin you have, if the loss is now equals if your loss is now greater or equals to this 19,800, that means probably Bitcoin goes to zero, which is not possible. You understand? I'm just saying it. Maybe you are not using leverage. You are not a leverage trader. You understand? You just enter with 1x. We'll talk about leverage later. Don't worry. You understand what I'm saying now. Just take it the way it is. So let's not assume that Bitcoin goes to zero, then you lose your you'll be forced to close this because there's no longer margin to keep this thing open. You understand? So it's either you add more money to keep it running. Though it's if you are doing like this, you are buying one BTC and you are not having any leverage, anything, you can you can hardly lose your money. You can hardly lose your money because it will just be like you are trading sports. You understand? If you are using 1x. Now, don't worry. You get when we get to leverage, you understand. But just understanding that this margin is what you must have to keep your trade running. If your loss should go below your margin, then your trade will either close or add more margin. You understand? Now, we have two types of margin. We have two types of margin. We have two types of margin. We have cross margin and isolated margin. You understand? Let's wait first before I explain this so that it will not be looking as if I'm speaking in tongues. Let's talk about leverage first. Right? Let's talk about leverage. Then when I'm done talking about leverage, we'll go back to talk about we are running out of time. Okay. So now let's talk about leverage. Now, with leverage, you can open more position size than what your balance can originally open. That is leverage. You can open more position size than what your balance can open. That is position size. That's leverage. Now, if one Bitcoin is $20,000, for example, now you must need 20,000 to open one Bitcoin position, one BTC position size, right? You must need what? 20,000 margin. You understand? Let me go again. With leverage, you can open more position size than what your balance can originally open. Example given, if one Bitcoin is equals to $20,000, then you will need $20,000 to open one Bitcoin position size. If you are to open one, you want to long one BTC position size or you want to short it, you must need what? You must need one Bitcoin, right, to open it. But with leverage, example given, 100x, you can open one BTC position with just $200. Now, this leverage is just like your broker backing you up, borrowing you money to open more position. You understand? Now, if you're using 100x, that means you can open 100x more than what your money can open. You can open 100 times more than what your balance can open. Your balance originally you have $200. You understand? If one Bitcoin, simple mathematics, if one Bitcoin is equal to $20,000, that means $200 is going to be 1 divided by 100, right? Yes, because $20 is 20,000 divided by 100. So one Bitcoin should be your $200 should be able to open 0.01. Let me go to that whiteboard. Just clear everything for me. Let's assume that one BTC, right, is equals to 20K, $20,000. Right? That means for you to open a position size of one Bitcoin, you must have $20,000, right? Now, if you are giving 100x leverage, let's say you are using 100x leverage, This 100x simply means that you can open times 100 of what this amount can open. You understand? You can open times 100 of what this $20, $20,000 supposed to open one Bitcoin. But because you are using 100 leverage, 100x leverage, you'll be able to open 1 times 100 BTC. You'll be able to open 100 BTC. That's 1 times 100. You understand? You'll be able to open it with the same $20,000. With the same $20,000. Provided that you are using what? 100x. I hope that is clear. Provided that what we are using 100x. The same thing if you have $200, or let me just say, if you want to open 0 points, if you want to open 0 points, if you want to open 0.001 BTC, if you want to open 0.001 BTC, that means you'll be needing, and one BTC is 20,000. You'll be needing you'll be needing you'll be needing like $200 to open it. This is simple mathematics. If one BTC is $20,000, then 0.001 will be both sides divided by 100. You understand? 1 divided by 100 will be this. Understand? Then, so that means 0.001 BTC is going to be $200. Now, originally, you can only open 0.001 BTC with your $200 in your wallet. Now, if you are using 100x leverage, it will allow you to be able to open both sides divided, multiply by 100. It will allow you to be able to open 1 BTC. Because you have already multiplied this by 100, you understand? So you'll be able to open 1 BTC with the same $200. I hope this is clear. Right? Now, you now have 1 BTC open, but your margin is still $200. Your margin is not going to increase. Your margin is still $200. So this simply means that if you're using 100x, you'll be needing minimum of $200 in your wallet to keep this 1 BTC. Now, instead of you to be able to open 1 Bitcoin with $20,000, you can open 1 Bitcoin with $200. You can open 1 Bitcoin with just $200, right? You can open 1 Bitcoin with just $200. But this $200 is your margin. No matter what you do, you must ensure that your loss does not go below $200, or else you'll be liquidated. I will talk about what liquidation is, or else you'll be forced. Your money, let me just use straight word, or else you will lose this money. If your loss should go below $200, you will lose the money. Now, the problem comes from this. You are trading 1 Bitcoin, and you are trading it with $200. Now, if Bitcoin should move, original price of Bitcoin is $20,000. Now, if 1 Bitcoin that you are opening with $200 should move to 19,900, your margin will be reduced to $100 because you are now losing $100 on your 1 Bitcoin that you open with $200. If Bitcoin should move to 19,800, you're already losing $200 on the 1 Bitcoin you're opening, and you are using $200 to open it. That means you're already out of this trade. Do you see how fast that is? Very, very fast. Just $200 movement, you are out of the trade. You have lost your money like that. I hope this is clear. You have lost your money like that. That's the problem of leverage. But if it's going your way, you're opening 1 Bitcoin with $200. Now, if 1 Bitcoin, original price of Bitcoin, goes from $20,000 to $20,100, you're already on profit of $100. If you move to $20,200, you're already on profit of $200. If you move to $21,000, you're already on profit of $1,000. Your margin will now become $1,200 because your initial margin is $2,200. So, and Bitcoin has moved the price difference of $100, $1,000. Your new margin now will be $1,200. That means you are on a profit of $1,000. I know this is complicated, but I believe if you listen and re-listen and ask questions, you will get it. You understand? All right. Now we'll go back to